Fundamentals of Accounting Module 3, Lesson 5. Lesson 5. Prepare an unadjusted trial balance. The fourth stage of the accounting process, ensuring debits equals credits. What is an unadjusted trial balance? The unadjusted trial balance is a list of all ledger accounts and their balances before any adjusting entries are made. It is prepared after posting all journal entries but before year-end adjustments. Its purpose is to verify that total debits equal total credits, a key rule in double-entry accounting. Step-by-step guide to preparing an unadjusted trial balance. Step 1. Gather the general ledger balances. Go to each ledger account and determine the current balance. Each account will have either a debit balance, like assets and expenses, or a credit balance, like liabilities, equity, and revenues. Tip: use the running balance column if your ledger is automated. Step 2. Create a trial balance template. Your trial balance should have the following columns: account code, account title, debit, credit. You can use Excel, Google Sheets, or manual forms. Step 3. List all accounts with their balances. Enter each account's code, optional if using a chart of accounts, name, balance, placing it in either the debit or credit column. Example entries: account title, debit, credit cash, $150,000, accounts receivable, $80,000, equipment, $200,000, notes payable, $100,000, capital, $330,000, sales revenue, $120,000, rent expense, $15,000, salaries expense, $10,000. Step 4. Add the total sum both the debit and credit columns. If the totals match, your entries are arithmetically correct. If they don't match, check for omitted journal entries, misclassified accounts, such as placing a debit in the credit column, transposition errors, for example, typing 200 as 2100. Step 5. Title and date your trial balance. Your final trial balance should have heading format: ABC Trading Unadjusted Trial Balance as of December 31st, 2025. Why the unadjusted trial balance matters. It serves as a checkpoint before adjusting entries are made. It allows you to detect recording or posting errors early. It's the foundation for preparing adjusting entries in financial statements. Pro tip for bookkeepers: always double-check that all journal entries are posted. Each ledger balance is updated. Only one balance, either debit or credit, appears for each account. Totals match perfectly. End of Module 3, Lesson 5.